Talabat could be the most profitable delivery company in the world, and it's in the MENA region. What does that say about us in the MENA region?
We like to eat and we're lazy.
Yes.
We don't want to cook.
Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, and investment rounds. We have a great episode for you today with three wonderful guests. Omar Sati, Managing Partner at Dash Ventures, Yana Dirani, Head of MENA at Endeavor Catalyst, and Zafer Younis, Founder and CEO at Silicon Valley Venture and Innovation, SVVI. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA, startup, VC, and tech space. And as always, from FWDstart, we have my co-host, Jamie Lane. What's happening this week, Jamie?
Good evening, Ahmad. That's the first time I've had the opportunity to say
Oh
that.
my God, it's an evening.
This is great. You can see the golden light streaming in here. So I'll only get hopefully moderately better looking as time progresses through the course of this hour. We're starting from a low point, truthfully. But in any case, look, this is a great week, I guess, in that we're definitely not scraping the barrel as far as updates are concerned. So I guess a trend over the past, I don't say weeks, but months in reality, I guess, is the lack of growth stage funding. And then last week we had General Atlantic opening the office. Now this week we have General Catalyst making their first investment in Saudi, which is terrific. So they're leading the Series B for Lean Technologies. That's a 67.5 million round. And they weren't alone in terms of making their first investment in Saudi. We saw the participation as well of Bain Capital Ventures, as well as Stanley Druckenmiller's family office too. So super encouraging stuff. I guess some background and context for Lean, founded in 2019. They specialize in providing financial infrastructure, so allows data sharing between bank accounts and applications. So essentially means funds are transferred between but two bank accounts, so there's no intermediary or the payment processor or credit card network is kind of cut out of the equation. They've been super successful. So they're regulated by ADGM and UAE. They've processed over $2 billion in payment volumes. Clients would include Eand, Damak, Kareem. So pretty varied. And in terms of how they're going to deploy the new funding, it's going to be used to scale the pay by bank and open bank offerings. Obviously, the Saudi Central Bank has made some progression on that front only in recent months. I think they introduced a second open banking framework, so we can expect more on that, I guess, in the near future.
I have a few questions on Lean technologies, but first let's start with those new VCs who have their first investment in the MENA region and in Saudi. General Catalyst, Bain Capital, Stanley Druckenmiller's office have made their very first investment in MENA, and that's in Saudi, in a fintech company, Lean Technologies. What do you think is driving these global players to enter the Saudi market, and why now? And what do you think the potential ripple effect of this in the region?
Allow me to take a stab at it as an international
Yes.
investor. We've been struggling over the last few years to explain to everyone why they should be investing in emerging markets. Now, when we look at the MENA region, Saudi is definitely a more stable market than if we compare it to Egypt, for example, and yet we still believe in those. But Ahmad, what we've been seeing is more and more, as you mentioned, General Atlantic opened an office a couple of weeks ago in Saudi. When you look at the MENA, at the GCC plus, say, Egypt, Jordan, the Levant, and you look at the size of it is very similar to the US, right? From a demographic perspective, it's a young demographic, very high internet penetration, and in many places like Saudi, very high spending power. Add to it the regulatory framework that is from SAMA, from CMA, who are really trying to create those sandboxes and give regulations a go to make it easier to make business. Add to that investments that are coming from sovereigns like SVC. It's a great place to be, where you have a great demographic, scalability, ease of regulation, kind of a green field to really grow and to really have your investments grow. Think of it as Brazil maybe 10, 15 years ago, and look at where they are now.
Zafer, what do you think?
صراحة, historically, and when we looked at these big name VCs making investments in the region, people were skeptical, thinking, maybe they're just trying to please regional sovereigns or the regional backers. But in this particular case, and lately we've been seeing larger rounds, which signal more conviction. I don't think any serious VC firm, especially someone like General Catalyst, would bet this amount of money. And when you compare it to their fund sides, this is definitely a high conviction bet. I've met the team of this startup several times. This is a world-class team. The opportunity they're tackling is a world-class opportunity. And you put those two together, it's not that much, of news, to be honest. But I'm encouraged by it, of course. I think it's great because it takes a few courageous VCs from Silicon Valley, hopefully, to do these rounds, and then it becomes the market norm. And we've seen this in other markets. And it's interesting. I was looking at a study the other day that looks at the inflow of these like large round VCs, like especially from big name Silicon Valley VCs, and then it's almost always followed by an inflection point in that ecosystem. So hopefully, we're going to see acceleration in our ecosystem following these great rounds.
I've seen a lot of VC firms internationally going to hot areas or hot emerging markets because there's a lot of capital coming in from that region. Usually VC firms want to raise that capital from there and then invest it wherever they want. But in this case, what we're seeing this week is that those VC firms are investing their money in here. So this is different. This means that they believe in the region. I agree with you, Yana and Zafer. Omar, what do you think?
So, I mean, I echo what Yana and Zafer said. Obviously, all the good points. It's fantastic for the region. I think because we don't see this so frequently, when you do get something like this happening, we all get very, very excited. But I'm going to take a different angle here, which is this is not the first time a big name VC invests in the region, right? I mean, we've had SoftBank and other big names investing in Dubai. We've had Sequoia investing in Egypt. I mean, we've had these big names investing in the region for a while now. I think what makes this interesting is Saudi Arabia and fintech. I think this is what differentiates from others. Fintech, which is extremely highly regulated. And I think what's driving it clearly in Saudi Arabia is Vision 2030. That's why a lot of people are flocking to Saudi Arabia. This is why people are setting up in Saudi Arabia. This is why many of the region's fintech darlings that had started out maybe in Dubai have now set up headquarters in Saudi Arabia. And they're doing a fantastic job, Saudi, so far, with some other regulators and VCs and stakeholders to make Saudi a fintech hub for the region. I think it actually started out in Bahrain. I mean, Bahrain has always been the financial capital of the region to begin with, but Saudi just has the size, right? It has the size. It's a different beast. Exactly. So when it says we want to attract this, they can do it. I agree with Zafer that this is a world-class team. So I think when you have a company, you have to have not only the market dynamics, but you have to have a business that makes sense, traction to a certain extent, and have to have a team. I think this is definitely a bet on the team, the potential of what open banking can do in the region, because this is absolutely a game changer. And I think this is an opportunity for Saudi Arabia, where open banking in Europe, particularly in the UK, it's been a disaster of missed deadlines, bureaucracy, and it hasn't really picked up. We actually looked at an open banking company back in 2018 or 2019, along with our friends, AB Ventures, Faisal Haqi. It didn't have the traction that it needed. This is an opportunity for Saudi Arabia to sort of say, we're gonna accelerate things. Now, my worry is with all of this comes cautionary tales. You raise the money, what are you going to do with it right now, right? This is what we need to look at. When you have $67 million and you've raised $100 million, where do you go from here? What do you have to show for it? They really need to show traction. They really need to start showing monetization. You need to see this happening. Is this going to spur or catalyze fintech companies? Like, is it going to help the Zinas and the Barakas and other fintech companies that can use open banking for their consumers? We need to see that. And I just hope it doesn't set a precedent of size and valuation for many other startups, because this is typically what happens. These big guys come in, they set this benchmark of big round sizes, massive round sizes and valuations. And then, other VCs and startups it just raises things a little bit. Just when we felt these figures we're coming back to reality. I hope this doesn't push things back up again.
So Omar, let me stay with you here. With lean technology, they're focusing on A2A, account-to-account payment transactions through open banking. How can they overcome the challenges by the existing ecosystem here, where you have payment processors, you have payment gateways, you have all of these intermediaries? They're threatening all of these big intermediaries. How can they overcome all that and succeed?
They're going to overcome that by virtue of having their product working. If they can integrate with all the banks, and if they can make, people are looking for different solutions. I mean, look at Amman, for example. You've had this new product, Click, which came out of Bank al-Ittihad and scaled or was picked up by all the other banks. People are more than happy to use Click to make payments than visas and checks and anything else. It's seamless. So I think all they need to do is, by integrating into all the banks, having a secure product, security is going to be key here, right? Security in terms of breaches and data and privacy. If it's going to be seamless and you can now transfer money and accounts between people and peers and businesses, and you can track that and you can record that and you can file that and you can use that for seamless accounting and budgeting and invoicing, I think it's gonna change the game. I think right now the fear is actually on the incumbents that need to figure out how are they going to, like for example, Visa and MasterCard, how are they going to continue to make their product and their solution, how are they going to justify the logic of that in a space where, you know, A2A payments become seamless and cheap? How do they justify the merchant fees and the credit card fees and the payment processing fees? But they're not stupid, right? They're not sitting idly by. Visa is making acquisitions in the space, and I mean, they know what's
and they're investing
coming.
in similar in those companies.
Exactly. I don't think this is going to be another, you know, blockbuster moment saying, oh, Netflix is nothing. You know, I think these guys are on it, and they're going to make strategic moves there.
Yana, you talked about the regulations, and Omar talked about the regulations in the EU and in the UK and how it was really difficult. In Saudi, we know that they're working on regulations for open banking. There's two types of open banking, the account information and the payment initiation. So it seems we're okay now with account information, but we're not there yet with payment initiation and getting access and making the transactions in the banks. Do you think this would be a bigger challenge for Lean and other open banking companies in Saudi?
I think there's a lot of market education that's required, because banks are traditionally more traditional behemoths, right? And they're not open so quickly to, okay, let's innovate. Oh, open banking, let's do it. So I think there's a lot of market education and trying to forge those strategic partnerships with those bigger banks that would potentially solve the problem much faster.
Also, you consider the work that has been done by the governments of the UAE and Saudi Arabia in talking to these investors, courting them when they're in market. Probably about 5 weeks ago, we were with a fintech investor in the region from the US on a roadshow. We get a call on the second day from the office of the Minister of Economic Development asking for a meeting. They've read his Twitter account and they've asked for a meeting. The guy goes, meets with the minister, and the minister takes him through a step-by-step plan of how they're fixing this, how they're improving this, where the innovation is. And it's this kind of effort. So like someone like General Catalyst, I'm sure they had access to the highest level of strategy, and policymakers in Saudi. It helps. I'm sure they compare it back to their, home market in the US and the bureaucracy and the time it takes to have legislation or fix something. But it's encouraging. And then you finish a meeting with those ministers, and then comes the follow-up emails and like the action plans. It's totally different than what it used to be maybe 10, 15 years ago in the region. The government makes like a very active effort to show these VCs that they mean business and that their eyes are on the board and they're like, executing.
So before we move on to the next story, let me ask the contrarian question. Fintech is hot. AI is even more hot now. Last week, we talked about telecom and we talked about deep tech and how there's a $300 million fund for deep tech. Where would you bet your money now as a contrarian in the MENA region? If you want to invest in something nobody else is looking at, what would that be?
And from my side, I'm gonna start because I know much less than Yana and Omar about the region, but I'm very bullish still. I know valuations are crazy, but I'm still very bullish on fintech. I'm very bullish on AI in general globally. I think for the first time, I think technology is going to create more value over the next 10 years than it did maybe over the last 40 years. I was listening to Tomas Tongos from Theory the other day saying that, software historically has created all these giants just by going after that 2 to 3% software budget. And now with AI, all these startups are going for the labor line item, which is like 100, 500 times more. So I know the consensus worldwide is like hot. It's like valuations are crazy, but also like what we're seeing, the technology we're seeing. Just before you started recording, we were talking about that AI thing and what it did. And like almost every week, there's like a surprising feature or a surprising thing that's happening. For us, even like people in technology, like when was the last time so many exciting things happened in such a short time? So yes, it's hot, but probably it's a good time to be investing. Omar and Yana,
Okay.
for the regional take.
I actually agree with you, Zafer. But one thing, Ahmad, allow me to be even further contrarian and tell you that we're not there yet in the region. So when you look at innovation, and Zafer started with talking about, the software and the technology companies, the first disruption was the computer, right? Think about those times at that time, and then the software. Then you had if you look at the UAE, since it's one of the more developed markets in the MENA, take it to 2015, maybe, so let's say 10 years back, what was it? It was delivery, it was basic payments, it was e-commerce, the things that are targeting the consumer. This is the very first wave when you're disrupting technologically. The second one, and when you start disrupting other stages of the ecosystem, say the health tech, the climate tech, the prop tech, which we are starting to see more, and they all start as consumer businesses and then move on to becoming B2B SaaS. And only after that do we have the deep tech and the AI. And what I think, honestly, AI is not going to be a standalone industry like we have today as fintech. I think eventually it's going to be embedded in every single business. I mean, today we are getting crazy evaluations just by seeing the word AI, whether they're justified or not. But I do think we still don't have the right talent in the region to really say we can do AI. And deep tech really requires a lot of governmental support, but also university research and grants. This needs to be done for it to be more advanced. I think today we're more moving into the stage of businesses becoming more solidified in the B2B space and moving away, maybe a little bit away from just pure e-commerce and fintech into the prop techs and the health techs and the ed techs. We still have a lot to be disrupted. And I think AI will just move swiftly and softly into each one of them. But I don't think we're there yet to have it standalone.
I agree 100%. I mean, look, when you're investing in the region, when you're looking at just the region, you're kind of limited to what you're seeing, what can happen in the region now, right? I mean, look, I've been investing since 2010, right? So over the last 14, 15 years, where the ecosystems have come and what people are building today, and the founders, the startups, the technology are amazing, phenomenal, how far we've come. But I agree with Yana that we still have a long way to go. And if you want to be contrarian in the region, I don't think it's about what technology that you invest in, because it is AI. These things can easily be, brought in and used. It's about where you use them, right? It's like AI and climate tech, AI and healthcare. Just like Yana said, this is where you can be a little bit contrarian and shift away. I do think what Lean Technologies is doing, this is a long game, right? I mean, what they're doing is this is an infrastructure play. This is not like they're going to start monetizing tomorrow and where they can just put ads here and provide a subscription. This is not transactional. This is going to take volume and frequency, and it's going to take a very long time. And I think it's this growth that they're making the bet on. But if you want to be contrarian, contrarian means doing something that's absolutely revolutionary and game changing. Just to give you an example, I haven't seen it in the region, but I had a conversation with a company that's looking to raise money as well, not in the region. It's in Korea and Seoul. And what they're doing is they're doing lab-grown crustaceans, right? They're doing shrimp and crustaceans, growing it from the lab. This is revolutionary, right? This is not plant-based meat. There is lab-grown meat, beef and chicken. This is lab-grown crustaceans. And what I saw yesterday was revolutionary. Absolutely. That's contrarian. That's where you want to put your if you want to bet on the future, but that's not in the region yet, right? We don't have the talent, we don't have the licenses, we don't have the research and development centers. But if Saudi and Dubai and many of these companies with massive war chests stick to their promise and do that and bring in talent and bring in these partnerships, I don't see why we can't be there in the next 10 to 15 years.
Yeah.
One quick thought. First, I don't think we're not that far away. Even on deep tech, the amount of talent that flew into the region over the last few years, and it's those black swan events, that typically get things to tip over. So like you had COVID, you had like a stream of talents from, Eastern Europe, moved to the region. Revolut now has, I don't know, 136, 150 engineers organically, by the way. They didn't like make a deal with any government to have an office. They just organically moved to the UAE. You have ATRC in Abu Dhabi. I think they have 1,600 researchers and PhDs and agreements with like most leading universities around the world for IP licensing. Deep tech is sophisticated and it's complex, and it's not an easy one to get right. But we're getting closer, and then the other thing that I want to say is like we don't have to be good at everything, right? Like you look at innovation that's happening in Europe, and they're definitely leading in biodegradable materials because of the regulations they have. The US is really lagging behind in that area. So it doesn't have to, like, we don't need to, be innovating on like, maybe we should just innovate like with things that we have an advantage in and like a natural ecosystem for.
Yeah, and be specialized in that.
For that to work, just on Zafer's point, is I feel we need to, different markets, different countries need to be coming together to try and find that competitive advantage, what we do best, and work together, as opposed to having Dubai pitting against Abu Dhabi, pitting against Riyadh. I feel like we're all pitting against each other. Abu Dhabi wants to be the climate and the environmental capital. Then you want to have the fintech and the gaming capital. Then you want, I think, let's pick a few niches that we do best at, stick to those, and not go against each other, so we can really become a hub for something, as opposed to not even a hub, but just good at many things. Again, it's the whole jack of all trades, right?
But they're
Well, I
trying.
can push back. I can push back on that one, to be honest. I like the competition between those cities, because every one of these, they're focusing on one specific thing, and they're competing globally to become the best place for that specific thing, like energy, gaming, fintech, etc. But you want to see the whole region come together to focus on that one thing that we will be known for. I think this is really hard, especially that everyone has their own incentives. But hey, we might not have a lot, but we have one crazy IPO news. Jamie.
It's just a ridiculous company, really. I know that we had Khaled
Exactly.
We had Khaled on, was it like 2 or 3 weeks ago? And I think we were supposed to be talking about Divisional's IPO, and he just kept talking about Talabat because he just read the prospectus. And yeah, after reading it, I mean, it's insane. Like this is just such an incredible company. So yeah, essentially it's been sort of obviously in the rumor mill, and now it's confirmed. So they're going to be floating on the Dubai financial market before the end of the year. So expected listing date is set as of this moment for the 10th of December. So maybe just some top line standout figures: 6 million active users as of September, 119,000 active riders, 5.4 billion even GMV, an adjusted EBITDA of 354 million. So if you consider EBITDA as a percentage of GMV, it's about 6.7% EBITDA margin for for food delivery, which is, it's not bad. So yeah, I mean, in terms of the IPO, it's expected to be more valuable than its actual parent company itself, Delivery Hero, which is also just bonkers. Emirates MBD, they're one of the banks on the IPO. They're expecting it could be worth up to 14.4 billion. Bloomberg Intelligence, more conservative, 12 billion estimate as far as they're concerned. Also staggering is that Talabat is debt-free. So that's in contrast to Delivery Hero, which is, I think, 3.5 billion worth of borrowings. So it was only one of 2 regions, the MENA region, which actually positively contributed to Delivery Hero's EBITDA in 2023. So they're looking to sell a 15% stake in the business. And so as a proud Talabat Pro member, I look forward to this float. I've certainly provided them with enough of my money. They've expanded my waistline single-handedly. So yeah, I have a bone to pick with them, really.
Jamie, how many active users did you say they have?
They have 6 million
6 million monthly active users. And with
as
only
of
6
last month.
million
Yep.
active users, they were able to create this big of a company and $12 billion valuation. How come Talabat's valuation will be 4x more than its parent company, Delivery Hero? And how come it's debt-free in a delivery business? Any reactions at all?
First of all, I think about it this way. Talabat operates in 8 markets in the MENA, and they are the leaders in all of those markets. And here I'm targeting more the valuation perspective, how they're more than Delivery Hero. I mean, first of all, they're net income positive, right? These guys have around, let's say on average, $250 million in net income. The other guys are down like $2 billion, okay? And these guys have no debt. And from a debt perspective, I mean, I would assume, thinking about it, maybe they've been very efficient in their operations. Maybe they've been using their cash flow to do some strategic partnerships. And this is just me thinking outside the box of how come you're debt free in this market. I guess efficiency and being strategic, but this is my first take on the matter. But from a valuation perspective, honestly, I'm not that surprised. I mean, again, no debt and really positive net income.
I mean, it's not heard of in any region. One of our guests, Khalid Talhouni, was on the show a few weeks ago, and he was like, I've never seen anything like this in this industry in any region before. Talabat could be the most profitable delivery company in the world, and it's in the MENA region. What does that say about us in the MENA region?
We like to eat, and we're
Absolutely.
lazy. We don't want to cook.
And I think the $1 million question is, how can we get an allocation?
Yeah.
Oh, yeah.
That's the one we want to solve for now. Anyone has any ideas? It's like good luck getting anything.
But
Hey,
you know, I
Talabat team, get us
wonder.
in.
I mean, it's great that we have Talabat, apart from the fact that it's profitable and this valuation, they're going public. Again, it gives us a breath of fresh air as VCs. But I always wonder, the bigger question is, okay, they're going to list. Is there enough liquidity for those shares to be trading truly and not jumping up and down just because there's lack of liquidity and a lot of demand for selling or buying at the same time? I'd love to see it, because I think it's been a big pain point for Dubai, Abu Dhabi, and the Saudi financial markets of, okay, we want our companies to list on our stock exchanges, but what are we providing them? How can we pump more liquidity? Because also, if you look at the UAE, at least the investors or the family offices that typically invest in the public equities here, they like companies like utilities that give you dividends. They like this stream of income that's going to come in. And usually startups, bar Talabat, but the startups that are listing today, we don't have that.
Investors like fundamentals in the region, and this company has very strong fundamentals. I think this is part of the solution, is like listing such strong companies that are going to actually attract capital. So the quality of these companies, that like, how do we get there? How do we get to the liquidity? It's just like list enough good quality companies that international investors, would want a part of. So, hopefully this is part of that solution. Do we have the liquidity right now in our markets to support it? Maybe for 15%, the answer is yes. Like we have larger listings, right? I think as long as the fundamentals are there, and don't forget, this is like such a consumer touching business, right? Like everyone has tried it. Everyone knows exactly what they do. Everyone knows they do it well. Their billboards are all over town, not just for the IPO, but like for the last, few years.
The brand is already big among
Strong
all
brand
retail
recognition,
investors. Yes, exactly.
So easy
Omar.
business to understand. It ticks all the boxes.
Everything is right. I think this is fantastic. They're clearly a great company. I did a little bit of research yesterday to try and see if I can find any numbers to compare it to the other groups, the other companies within Delivery Hero. And for example, you have Delivery Hero, all in all, a publicly listed company growing 9% year over year. That's not attractive for investors that are looking for yield and appreciation. Talabat, on the other hand, is growing 30% year over year. Its Asian business is dropping. It's actually losing. It's not even growing. It's in the negative. So that is why that 30% growth year on year for a company at that level, at that size, that's very attractive. And that's why it's going to become the poster child for Delivery Hero. The question here is, can they play the public game? With all the comments that Yana and Zafer said, which are very important, right? Which is, can they attract the liquidity? And I believe you want to attract liquidity, you want to attract capital to a specific exchange, you have to have the stock, the company that attracts that capital, or the companies that attract that? Can it play the game? Can it communicate openly and transparently and regularly? Can it announce and do its earnings announcements and put out its earning reports and its financials on time? Can it continue the growth? Hence your question. I think one of the questions you asked was, it's looking to get into other products like healthcare and cosmetics, as opposed to growing or expanding into other markets. So it's like vertical versus horizontal expansion. That's clearly something that they need to do. When you're looking to, if you notice, all these companies, before they try to get to IPO, you start to see acquisitions. We've seen it many times before, because they need to show that top line growth. That's what investors want. It's no longer a year-to-year game. It's now a quarter-by-quarter game. Can they do that? It's going to be a different business culture shift within Talabat. And are they ready for it? And can they continue doing that? That's what's going to make the stock attractive. That's what's going to bring in the liquidity. That's what's going to appreciate that level and make it a good investment for people. So that's the test going to be going forward.
Omar, you mentioned something about they expanding horizontally or vertically. They say that they plan to expand into healthcare, beauty, and fintech. Is this to increase the hype on the pre-IPO valuation, or do you think this is really good for them in the future to keep that growth going and keep attracting more capital from the public market?
I don't think it's hype, because they probably have plans for this, because it makes complete sense. I mean, you have Kareem went into fintech, if you realize, with Kareem Pay, but they've already set with Talabat. When you have that value chain, you already have the piping and the infrastructure there. Why not add other products on top? It's seamless. It's actually, to a certain point, maybe that playbook could be a better return on investment than expanding into a new market. You're already in 8 markets. You're already delivering food and groceries. Why not add, cosmetics, and why not add healthcare, for example, through pharmacies? You already have the infrastructure. I think it makes complete sense. It's like you literally have a pipe delivering something through there. You're just going to expand that pipe slightly and deliver other things through there, right? And if you have 6 million active users, you have people on Talabat Pro, why not allow fintech? When you say fintech, it's basically you're going to allow some financial services. Are they going to do something like Kareem Pay? Can you do something where, if we're all sitting today here at someone's house, we order Talabat, we can all contribute, we can split the bill? I think that's what fintech means. It means allowing these sort of payment financial services within the app. And I don't see why you can't do that. You have the engineers. This is all part of product development. I think communicating that clearly is for the IPO. It's letting people know we're already growing this much out of our existing core business. Imagine if we layer that now with fintech and healthcare, we're going to aim for much larger growth. This is what attracts people to buy the stock, and that's going to amplify or appreciate the valuation. And that's how you get 3 to 4x over your parent company.
Yeah, and on the fintech side of things as well, they've actually already kind of tentatively dipped their toes in as far as that's concerned. They've introduced buy now, pay later integration within Talabat as well, called Postpaid, which works somehow. Despite myself thinking that I'm a savvy consumer, it helps when you're ordering too much on Talabat and you feel like you don't have to pay for it right now. It's 30 days time's problem, but I think that is quite interesting.
Sorry, especially if you start ordering larger items. What if they start allowing you now to order TVs, furniture, for example, right? Delivery to your house. So now they can do that, right? They're already delivering. These are higher, more expensive items. Why not embed the buy now, pay later scheme there, where you can say buy a TV, but pay over 3 months, 6 months?
Let me just bring the other side of the argument that, hey, you're competing now to become a super app. Like everyone else in the region, not everyone, but many of the players, the big players in the region, they're trying to become the super app in the MENA region, covering multiple countries. Do you think this will dilute their brand, or this will, bring the growth that Omar is talking about?
Tough question, but I think it's worth a try because, as Ahmad was saying, the infrastructure is there and because the users are there. So it's not like you're looking right now to set up something new and acquire new users, and then maybe it works, maybe it doesn't, right? I think the effort to introduce those new categories versus the potential payout or payback could be probably much higher because you already have the customer base and you're providing them a higher value for the pro that they're paying, whatever it is, 29 or 20 dirhams a month. I think it's a no-brainer to try, but I wouldn't be so categorical about the brand. I don't think it would really dilute, but I'm no brand expert.
But on your question, I guess it relates to brand health and where the brand is and the relationship the brand has with the consumer. It's going super strong. If there is a time to try things, it is now. Yes, it will hurt them if they get it wrong. And honestly, I doubt. And also, like another thing, they need to judge: are there any competitors that are sort of head-to-head competing for the same consumers and specializing in just food delivery, so they're worried that the dilution might hurt them? I honestly don't think it's the case. Like most of the brands in the space are doing other things. I don't know what you guys think of Uber also, like going for the I think they were buying a travel brand. I forgot which one is it. So they seem to be this model seems to be getting tested like all over the world as well.
I always think about Uber when I want to book a flight to anywhere. I would like, oh, I wish I can book that on Uber app or Careem app. I know, as a consumer, I would love to see that. I'm just asking for the argument and the counter argument. Now, we talked about fintech with Lean, we talked about food delivery with Talabat, and now we're moving to AI.
Yeah, we're really rounding things out well. So let's talk about Writer. They raised a $200 million round. So that's a 1.9 billion valuation to expand their enterprise-focused generative AI platform. So in terms of Writer, it's founded in 2020 by May Habib and Wasim Al-Sheikh. So the two previously launched Cordoba together back in Dubai in 2011, back in the early days. So that helped companies to localize products to new markets. So it's in the language services and the digital content kind of sector. So I believe that company raised funding from Silicon Oasis Ventures and MENA Venture Investments as well, which I think was that Fadi Gandour's, I think, firm before WAMDA. So in terms of this particular company, the round was co-led by Premji Invest, Radical Adventures, etc. I won't go through all of them, but I guess it's kind of developed over the years as well into a full stack Gen AI platform. So essentially customized for various different enterprise use cases. Obviously a super intense space on the consumer side and on the business side as well, but they have carved out a niche and they've tons of clients, very reputable: Mars, Qualcomm, Salesforce, Uber, etc. But yeah, one that potentially got away from MENA investors despite them being
yes, and it hurts.
First,
I know.
Yeah.
It hurts to even ask this question. I mean, with Cordoba, we had multiple MENA investors investing in the company, and when they moved on and created Writer, we had 0 MENA investors. Why?
That's a very good question, Ahmad, honestly. And I mean, I wondered, I didn't know about Writer. I think I may have come across a piece of news maybe a few years ago when they raised, the first round, which was still huge. But that's a very good question. And I don't know why. I mean, I think the question needs to be posed to them, right? Did they even approach MENA investors for something like this? And did they approach them and they said, no, I don't get it. AI, generative AI for companies, I don't get it. Go ahead, do your thing. I mean, listen, for us, I'm going to speak as an investor for the moment. If you have an investment with a company, in a portfolio company, and whether it succeeds or not, but if that founder goes on to do something else, if your experience with that founder was great and you had a great experience and they move on to something else, typically, without a doubt, without even understanding, you would at least invest something based on the experience that you had before. That's a very big tell when an investor doesn't follow on. But here we don't know enough whether they were approached, whether she approached any of her existing investors or not. But I feel like Zafer with that big smile.
Yeah, exactly.
Zafer has a lot of things to say.
He knows something.
But maybe it's the other way around. It goes the other way around, right? Like if you're a great founder and you didn't have a great experience with your investors, maybe you wouldn't ask them for more money.
Absolutely.
And then I do remember one day, first of all, congratulations to Mike and to her co-founder, Wasim, both amazing founders from the region, moved to Silicon Valley a long time ago, tried their best with Cordoba. They put their hearts into it. Fine, it didn't work. this could have been a pivot. My guess, and honestly, I don't have any insider information, as Yana said, but my guess, this could have been a pivot had they had maybe more involved investors. But then it happened, this writer thing, and it happened most importantly before this generative AI became like a big word. And I do remember a friend that I never knew called me and said, like, I just made my first angel investment and I'm super excited about it. And it's in this startup called Writer, and she's from the region. I was like, who is it? He's like, my Habib. And that's how I learned about Writer. And then fast forward, and I asked him, what does it do? And he told me exactly what generative AI does today. He's like, they're using AI to figure out the tone of voice of a corporate. And I thought he was crazy for investing in it. Because back then, none of us knew what generative AI could actually do. Today, if you ask us, like, it's easy. Like, it makes sense. But they started early. I think it's important to know they started early. Congratulations to them. Also, just to put things into perspective, 200 million for maybe an e-commerce startup, totally different meaning than 200 million for Gen AI, LLM-based startup. So to put things into perspective, this is probably average, below average, check size. So it's not as crazy. But wow, how many times do we hear investors in the region say, like, or we were just saying, like, maybe in the region we don't have founders who can do deep tech and AI, and like, look at this team, they just raised like $200 million. So congratulations to them. It's awesome.
Yeah,
awesome
$200
story.
million is bigger than funds in the MENA region, and they raised that for only one round in a company. Yana, what do you think?
Look, I think it's amazing that we have, forget the Gen AI and deep tech. I agree on all of that. But what's amazing is that we have more serial founders coming out of the region. Regardless of whether the first company was a flop or a huge success, you still learn. And I would argue that you learn much more when it doesn't succeed. And you make sure that the second one is definitely going to be a success. So this is, I think, amazing news. Sad for us that they're all the way in the US and not here. But from a MENA VC perspective, look, guys, as much as I do believe that, I mean, again, I don't know whether they approached them and they said no. I think they probably were oversubscribed and they didn't have space for the MENA VCs here. But then again, let's not forget that the MENA VCs here have their PPMs and their LPs that say you invest in the region, in companies in the region, not in diaspora founders that left. But now I will go and ask Endeavor, why don't we have them as Endeavor entrepreneurs from diaspora
Okay.
founders? But I think it's great.
And one more thing to add, I just remembered. May did this. She had 2 kids in the process. She dealt with Cordoba, launched this. 2 kids. It's awesome. يعني شابوه صراحة. Amazing. Congratulations, man.
Right. Let's talk about B2B versus consumer AI. Which one do you think is the best play on the long term? We have ChatGPT now with search and Claude. They both have B2C and B2B products. And there's Perplexity focusing on consumer search, while Writer is focused on enterprise AI. What do you think about these business models?
Ahmed, to be honest with you, I think people have a preference. In general, people have a preference for B2C and others have a preference for B2B. Here, I would look at it in the same way I would look at SaaS. So if you were to look at the market dynamics and the market size overall, if I were to use SaaS as a data point, as an example, as a benchmark, B2B SaaS is a much larger, lucrative market than B2C SaaS, both in terms of size of contracts, both in terms of growth, in terms of margins, and in terms of churn and retention. And if you couple that with what you're seeing, I don't know if you noticed lately in the news, just a few weeks ago, you had Klarna as one example, and many companies now are getting rid of all of their SaaS providers. They're getting rid of Salesforce and Workday. And they're saying, we're going to build AI internally. We're going to build AI internally to replace the SaaS. And this is millions and millions of dollars in SaaS contracts on a yearly basis that they're getting rid of. And they're going to build these things internally via AI. And Writer sort of fits right within that. So if I look at these data points and what's happening, I would think that B2B AI products similar to SaaS would be more attractive. And I think even adoption, companies would likely want to adopt that quicker than consumers. I think monetization is also easier.
I think that one of the challenges probably for a company like Writer is that there are a lot of experimental budgets, corporate experimental budgets for AI right now, and the real question is how much of that revenue is sticky and how much of it will go beyond the POC. But this is not just a challenge for Writer; it's a challenge for the whole category. As long as they hopefully beat the wave and just execute well and get good products to market, probably they'll get over that. We see there are a lot of horses in the race for that space. They just raised the money. now comes the but raising the money is of course is not easy, but now comes the real test.
The hard part, exactly. That's what it is. Raising the money is one thing. You raise it on potential, you raise it on excitement, you raise it on traction. Now, can you grow that? Can you continue that? That's the hard part right there. Delivering on that promise is the hard part.
And hey, who else can deliver on this promise that more than a woman from the MENA region who did all that? Yeah, exactly. So really hats off for both of the founders. Moving to the next story about a founder that's cashing out and exiting his company. Jamie, what's happening?
Yeah, this is a peculiar one, I suppose, on one level. So I'm Abdallah Abhishek, the co-founder and CEO of AstraTech. So a colossal company. They raised 500 million from G42, led that round back in 2022. I think since then they kind of went on a spree of acquiring various different companies. So Bottom would be one example, PayBuy as well on the fintech side. They also acquired and integrated Rizek. That was a company I think that Abhishek actually started himself as well. So I thought that was pretty peculiar. So yeah, he's departing after 2 years. So he's selling his stake. I believe G42 is going to be picking that up to the best of my knowledge. In terms of the replacement, current CTO is going to be taking charge on an interim basis. And just in terms of, I guess, a quote from Abdallah himself, the quote is, "I've done my building and now it's time for new leadership to grow what we've built." He hasn't disclosed what that next business venture is, but he mentioned he will go back to building from the ground up, end quote.
So it seems we have someone with some insider information.
No insider information. No
Okay.
insider information. Abdallah is a good friend. And most importantly, I think he's a great builder. And maybe the audience doesn't know the connection between all those different pieces that were put together to make AstraTech. But there was a strategic sort of vision to build an ultra app in the region. And there was Abdallah, who's like a great builder. He built a couple of, I don't know if it's public or not, but he built a couple of very impressive pieces of technology that were used in the UAE by probably hundreds of thousands or millions of users in a very short amount of time. This is around COVID. So the guy was like a trusted builder of tech. And then here is Bottom, which has a good captive audience who are using it to call, and it has networking effects with outside users, and put one and one together. Like, what do you make of such? You have an app that has a million, call it, users in your local market, but then 10 times that in international markets, and it doesn't take a genius to figure out that, okay, maybe remittance. So they start building all the fintech layers, get the license, I think the number one card issuer by numbers. For the audience, don't quote me on any of these statements. This is just from memory. But honestly, impressive story in a very short amount of time. So I had a call with Abdallah yesterday. He was in a very good mood. Like, just as anyone else, a founder leaves the startup, cashes out. Like, what's the story? I just think it's, he wants to do something new. He was super positive about the current team, about where they're going. I think there's so much momentum, by the way, in AstraTech. So congratulations to him. Also, when you have someone like G42 on your cap table, G42 is a major player in the field of technology. So I can only imagine that there are so many different directions, so many different things they can do with this asset.
Zafer, I want to ask you about Bottom and other questions on AstraTech. But Omar, what's your reaction?
Look, I don't know him. I don't know much about all of this, but I have a framework that I use in my mind when I look at announcements and PR announcements. I feel like the more details that are in a PR announcement, the more they're trying to hide, right? the more simple and straightforward the announcement, the more, the more simpler the situation is. I mean, I really don't know. This could be a guy that just decided, I'm a 0 to 1 guy. I want to go and do what I like best, right? It's getting to a point now where this is more like a private equity play. They're getting into fintech. You need regulations. It's bureaucracy. You have to get licenses. Maybe this is not his thing. Maybe he went and told people, this is not for me. I'm out. Or maybe, people said, this is not for you now. I think it's time to step down. I don't understand the sale of the whole stake. That's the only thing that caught my eye, because usually when you step down, if there is potential, you step down. We've had many founders that were the CEOs. They stepped down, they were replaced. They didn't necessarily sell their stake. They sell their stake in one of two reasons. One is they don't see potential, or two is they're trying to completely disconnect and remove themselves from being connected or associated with this entity. It could very well be as simple as he wants to build, needs the cash, wants to sell a stake to take that cash and build something bigger and better. So I mean, I think that's where I'm from, but I don't know much.
Omar, I think you touched on a key point. We're used to discussing VC news, and in the VC world, this might seem like a very weird story, right? Like the founder, etc. But this is a much more closer to a PE play, like Omar said, bringing a roll up, if you want to call it, bringing some mature assets like Rizq, it had millions of users, and then Bottom, the same, and then like big licenses and big licensing together. So like much closer to a private equity roll up play, buyout play than a VC, VC play. But I think what makes it similar to the VC space is that we had a very strong founder in Abdullah who was very vocal, very visible. And I asked him once, I told him, like, Abdullah, why do you keep such a big social media presence? Like, what purpose does it serve? And his answer to me, he's like, Zafer, why does the US, when they mention a startup, they mention the founder, they mention the CEO 10 times. But whenever they talk about, look at us today. We spoke about Talabat. Did we mention for once the name of the CEO? If we were talking about, right? And he's like, this has to change in our region. Like, founders have to be, vocal about their startups. I'm putting my name on it. I'm betting, my name on it, which I respect, to be honest. So
yeah, and this helps build serial entrepreneurs later on.
Exactly.
But my question about Bottom was basically, it was forced exclusivity in the UAE, right? Because they banned almost every other calling app except for Bottom, because it was built internally, maybe, or I don't know why else.
No. That's a perception, by the way. That's a perception. Almost from day one, there was there were like other telecom apps that did that. There were also international
But they're all
players.
banned. I mean, you can't call people on WhatsApp. You can't call people on Messenger. Maybe only Google Meet would work in there, and Zoom, of course, because it's business. But all the others don't really work in the UAE, right?
No. Actually, if you look into it, no. Of course, each telecom, and I might be wrong. It might not be each telecom company had its own app, but many telecom companies in the UAE had their own calling apps that worked. I'm not sure if it's as well as Bottom. I guess Bottom was like probably the cleanest, clearest, fastest one for call quality.
But also the key with Bottom, Zafer, at least when I was forced to get it to speak to people, is it was built so similarly to WhatsApp that the user experience was just flawless, because it's simple, it's straightforward, right? It was mimicking the user interface, the user experience of WhatsApp.
The issue is the other players in the market that had apps didn't want to advertise to the users that you can install the app and call your relatives for free. They were still hoping to get that extra few cents out of international calls. Bottom maybe was like the first independent one that got the license, and were like, building viral factors into it, like to get it like to spread more. But one thing about Abdullah that I'd also like love to bring to light here is how much they've done for the labor market in the UAE for blue collar workers. It's great how much effort they've put, like as Bottom, into serving that segment. whether it is by lowering the friction on remittances, on a lot of charity projects, a lot of like educational projects that they've done. Let's see how it goes from now. I'm hopeful that Abdullah will build something interesting, and I'm hopeful that Bottom will keep the momentum.
And hey, it's been only 2 years. Congrats to Abdullah for building such a big company with multiple products in only 2 years, and then being able to cash out and start the next journey in his life. Well, with that, thank you so much, Omar, Yana, Zafer, for joining us today. I really did not feel the hour.
That was
It
great.
flew very fast.
Neither did we.
It was
Neither
really-
did I.
yeah.
Thank you for
Thank you
having
so
us.
much
It
for
was very
joining us.
informative.